Hey, everyone, before we get started, make sure you hit that notification bell
Oh,
so you
yeah.
don't miss out on any future deep dives.
Right.
All right, let's talk Snowflake, ticker symbol, SNOW.
Okay. Mm.
This company is making some serious waves
Yeah,
in the cloud data platform market.
definitely.
And today, we're going to explore whether it might be a good long-term investment opportunity.
Interesting.
We'll be drawing insights from some research I've got here,
Okay.
and we'll also see how Snowflake stacks up against the investment principles
Uh-huh.
of a certain Mr. Warren Buffett.
I like it.
Oh, and as always, you can find links to all the sources we're using down in the episode description.
Sounds good.
So,
Yeah,
cloud data platforms are definitely a hot topic these days.
absolutely they are.
And Snowflake is right at the center of it all. But before you get into the nitty-gritty,
Right.
let's break it down.
Okay.
What does Snowflake actually do?
Yeah.
Imagine a massive, super efficient digital warehouse.
Okay.
But instead of storing physical goods,
Right.
it stores data.
Data.
All kinds of data.
Yeah.
That's Snowflake in a nutshell.
Okay.
They provide a platform for organizations to store, manage, process, and analyze enormous amounts of data, all in the cloud.
And what's really interesting is their ability to break down what we call data silos.
Oh, yeah.
Traditionally, different departments or even different companies would have their data locked away
Yeah.
in separate systems.
Right.
Snowflake's platform allows this data to be easily shared and accessed across an organization
Okay.
or even between organizations.
That's huge, especially in today's data-driven world where collaboration and insights are key. It's
Yeah.
like they're creating a universal language for data.
Exactly. And their business model is designed to make it easy for companies of all sizes to get on board.
Oh, nice.
They use consumption-based pricing,
Okay.
meaning you only pay for the data resources you actually use.
I see.
It's kind of like paying for electricity.
Yeah.
You only get billed for the kilowatt hours you consume.
So no massive upfront costs, which is great for smaller businesses or even startups who might be dipping their toes into the data world.
Exactly, and they've made their platform available across all the major cloud providers.
Okay.
Amazon Web Services, Microsoft Azure, Google Cloud, they're everywhere.
Wow.
It's like they're the Switzerland of data platforms.
Okay.
Neutral and accessible to all.
Speaking of accessibility, I was reading that they even support access through the Tor browser and Onion browser.
Really?
That's pretty impressive. Not your typical data platform move.
It speaks to their commitment to making data accessible to anyone who needs it,
Right.
regardless of their technical setup or perhaps their need for anonymity.
Interesting. Okay, so they're breaking down data silos, offering flexible pricing, and making data accessible across different platforms.
That's right.
But what really sets them apart from the competition?
Yeah.
What gives them a competitive edge, or a moat, as Warren Buffett would call it?
Their multi-cloud strategy is definitely a big part of their moat. Instead of building their own private cloud infrastructure, they decided to integrate with all the major cloud providers.
Uh-huh.
So whether a business is already using AWS, Azure, or Google Cloud Snowflake can seamlessly fit into their existing setup.
Gotcha.
It's a brilliant move because it makes them an essential partner for anyone operating in the cloud.
It's like being the universal remote control for data.
Exactly.
No matter what kind of TV you have, it can control it.
That's right.
That's a powerful position to be in.
It is. And when you consider the sheer size of the cloud data platform market, we're talking estimates ranging from $152 billion to a staggering $342 billion.
Wow.
You can see the massive potential for growth here.
Yeah.
That's a lot of data and a lot of potential revenue for a company like Snowflake.
All right, so we've got a large and growing market, a smart strategy, and a platform that seems to be ticking all the right boxes. But what about the people behind the scenes?
Yeah.
Who's steering this ship?
Snowflake has a pretty impressive leadership team with deep experience in the tech industry. Their current CEO, Sridhar Ramaswamy, has a proven track record of success.
And we can't forget their former CEO, Frank Slootman.
Right.
He played a key role in Snowflake's early growth and their focus on AI and cloud optimization.
Absolutely. Now let's dive into the numbers.
Okay.
The part I know you always get excited about.
I do love the numbers.
Snowflake's revenue growth has been nothing short of remarkable.
Okay.
They went from $264.75 million in revenue in 2020 to a whopping $2.81 billion in 2024.
Wow, those are impressive numbers indeed.
Yeah.
And their gross margin, the profit they make after deducting the cost of providing their service,
Right.
consistently stays above 65%.
That's right.
For those of you who might not be finance wizards, a high gross margin like that is a fantastic sign.
Yeah.
It means they're efficiently running their business and have strong pricing power.
It's like selling lemonade for $1 and only spending 35 cents on lemons and sugar.
Right.
That leaves you with a pretty sweet profit margin. Exactly. And speaking of profits, the big question on everyone's mind.
Are they profitable yet?
Not yet.
Okay.
But there's a good reason for that.
What's that?
They're investing heavily in research and development,
All right.
expanding their operations, and really building for the future.
All right.
It's a common strategy for high-growth tech companies, and it seems to be paying off.
How so?
They're projecting 29% revenue growth for the entire fiscal year 2025,
Wow.
exceeding their initial 26% prediction.
That's definitely a positive sign. It shows they're continuing to grow and gain market share.
It is.
And on that note, I think it's a perfect time to take a quick break.
Okay.
Don't go anywhere. We'll be right back with more on Snowflake, including a deep dive into Warren Buffett's investment philosophy and how it applies to this exciting company.
Sounds good.
See you in a few.
See you then. All right, welcome back. Before we jump back into Snowflake, I wanted to take a quick detour and tap into the collective wisdom of our amazing listeners.
Oh, I love this part.
Yeah.
It's time to open up the floor and see what stalks you. Our awesome audience think we should deep dive into next.
Exactly. Head over to our YouTube channel.
Okay.
The link is in the episode description.
Got it.
And let us know which companies you're curious about. We're always on the lookout for fascinating deep dives.
We are. And while you're over there, don't forget to hit that subscribe button and turn on notifications so you don't miss out on any of our future episodes.
Oh, yeah, for sure.
But for now, let's get back to our current deep dive.
Right.
Snowflake.
Snowflake.
Before the break, we were talking about their impressive growth and strong financials.
Right. And it's worth noting that while they haven't achieved profitability yet, their financials reveal some really interesting details.
Okay.
The research we're looking at points out that a significant portion of their losses are actually due to something called stock-based compensation.
Stock-based compensation. You mean things like stock options that companies give to their employees?
Exactly. It's a common practice in the tech industry, especially for companies like Snowflake that are growing rapidly and looking to attract top talent. Think of it as a way to incentivize employees to contribute to the company's success.
Makes sense. So it's not necessarily a bad thing, but it does impact their bottom line in the short term.
Right. And speaking of their bottom line, the research also highlights that their operating expenses have been increasing as a percentage of their revenue. Essentially, they're spending more to generate each dollar of revenue.
So is that a cause for concern?
Well, it's something to keep an eye on.
Okay.
Some of that increased spending is going towards research and development, expanding their sales force and marketing, all of which can be crucial for long-term growth.
It's like planting seeds for a future harvest. You've got to invest in order to grow.
Exactly. And speaking of growth, let's talk about their customer base.
Right.
One of the most impressive metrics we see is their incredibly high net revenue retention rate. It's actually over 150%.
Okay. For those of us who might not speak fluent finance, can you break down what net revenue retention rate actually means?
It basically measures how well a company is keeping its existing customers happy, and more importantly, how much those customers are spending over time. A rate over 100% means they're not only retaining customers, but those customers are actually increasing their spending year over year.
Wow, over 150% is pretty incredible. So not only are they attracting new customers, but their existing customers are sticking around and spending more. That's a really strong indicator of customer satisfaction and the value that Snowflake's platform is providing.
It really speaks to the stickiness of their platform. Once companies start using Snowflake, they tend to stick with it and expand their usage, and that kind of customer loyalty can be a powerful competitive advantage.
Absolutely. It creates a more stable revenue stream and reduces their reliance on constantly chasing new customers. But of course, no business is without its risks.
Okay.
What are some potential downsides or challenges that Snowflake might face?
Well, one potential risk highlighted in the research is customer concentration. A small number of their customers account for a significant portion of their revenue.
So they're kind of reliant on a few big players.
To a certain extent, yes. And while it's not necessarily a deal breaker, many companies have a few key clients. It does increase their vulnerability. If one of those large customers were to switch to a competitor, it could have a noticeable impact on Snowflake's revenue.
Makes sense. It's like putting all your eggs in one basket, or a few baskets in this case.
Exactly. Now let's circle back to their multi-cloud strategy. While it's a major strength, it also introduces a certain level of complexity.
How so?
Well, managing a platform across three different cloud providers, AWS, Azure, and Google Cloud, isn't exactly a walk in the park. It requires a lot of expertise and resources to ensure everything is running smoothly and securely across all these different environments.
It's like juggling 3 chainsaws while riding a unicycle. Impressive, but definitely challenging.
That's a vivid image, and it highlights the potential challenges of keeping up with updates, security protocols, and any changes those cloud providers might make.
So there's a trade-off there. The flexibility and reach of a multi-cloud strategy come with increased complexity, but it sounds like they're managing it well so far. What about innovation? Are they staying ahead of the curve in this rapidly evolving tech landscape?
Absolutely. Snowflake is heavily invested in research and development, constantly pushing the boundaries of what's possible with data. They're making significant advancements in areas like data sharing, machine learning, and even exploring the potential of blockchain technology.
So they're not just resting on their laurels, they're actively building for the future. And that kind of forward-thinking approach aligns perfectly with one of Warren Buffett's key investment principles.
You mean his emphasis on investing in companies with a durable competitive advantage, that metaphorical moat that protects them from competition?
Exactly. And in Snowflake's case, their ability to innovate and adapt quickly is a big part of that moat. They're not just offering a static product, they're constantly evolving and staying ahead of the curve, which makes them a much more attractive long-term investment.
It's like they're building a castle with ever higher walls, making it harder and harder for competitors to break in.
All right, so we've covered a lot of ground here. We've explored Snowflake's business model, their competitive landscape, their financials, their approach to customer relationships, and even touched on the complexities of their multi-cloud strategy and their dedication to innovation.
It's been a fascinating journey so far, wouldn't you say?
Absolutely. But before we wrap things up, there's one more crucial piece of the puzzle. We need to address risk assessment. Every investment comes with potential downsides, and it's important to understand those risks before making any decisions.
Right. We've touched on a few risks already, like customer concentration and the complexities of their multi-cloud approach.
But there are a few other potential bumps in the road that we need to consider.
Exactly. And that's what we'll be diving into next. Stay tuned because this deep dive into Snowflake isn't over yet.
All right, so we've talked about Snowflake's strengths, their impressive growth, their innovative approach. But as with any investment, it's crucial to understand the potential risks. You can't have the sweet without a little bit of sour. Right.
Exactly. Risk assessment is a vital part of any investment decision.
Hmm.
It's like checking the weather forecast before going on a hike. You want to be prepared for any potential storms.
I love that analogy.
Yeah.
So what kind of storms could Snowflake potentially encounter?
Well, one storm that's already brewing is the increasing competition in the data cloud market. There are other players out there, some with very deep pockets, who are hungry for a slice of this massive pie.
Yeah, those big tech companies are not going to sit idly by while a new player comes in and disrupts their playground.
Exactly. And remember, Snowflake's entire multi-cloud strategy hinges on these big cloud providers, AWS, Azure, and Google Cloud. Any shifts in their pricing strategies, policies, or even just the overall dynamics of the cloud market could have a significant impact on Snowflake's business.
It's a bit like building your house on someone else's land. You're at their mercy to a certain extent.
That's a great way to put it. And then there's the ever-present risk of security breaches. We mentioned the recent data breach earlier. But in general, any company dealing with large volumes of sensitive data is a prime target for cyber attacks.
Yeah, data breaches are becoming increasingly common and sophisticated these days. It's a constant game of cat and mouse between companies trying to protect their data and hackers trying to steal it.
Absolutely. And a major security incident could really damage Snowflake's reputation and erode customer trust. Then there's always the looming possibility of an economic downturn.
Right. If businesses start tightening their belts and cutting back on spending, Snowflake could see a slowdown in their growth. Their platform is primarily used by businesses, so they're not immune to the fluctuations of the business cycle.
Exactly. So while Snowflake has a lot of positive momentum going for them, these are some of the key risks that investors need to weigh carefully before making a decision.
Great points. It's all about balancing the potential rewards with the potential risks. So let's wrap things up. We've taken a deep dive into Snowflake, exploring their strengths and weaknesses, their opportunities and threats, and we've even analyzed them through the lens of Warren Buffett's investment philosophy.
It's been a comprehensive exploration, and hopefully our listeners now have a much deeper understanding of this fascinating company.
Absolutely. And remember, you can find links to all the sources we use down in the episode description. Do your own research. dig into those resources and come to your own conclusions about Snowflake.
Always a good idea. Knowledge is power, after all.
Couldn't agree more. And speaking of knowledge, head over to our YouTube channel and let us know which stocks you'd like us to deep dive into next. We love getting suggestions from our listeners.
We do. And while you're there, hit that subscribe button and turn on notifications so you don't miss out on any future episodes.
Perfect. Thanks for joining us on this deep dive into Snowflake. We'll catch you in the next one.
See you then. And remember, this is not financial advice. Always do your own research before making any investment decisions.